Welcome back. Well, let's get talking about a couple of more companies, and this is in our segment Midcap Spotlight. Sonal is going to tell us about a stock that has gained nearly 35% just in the past 1 month. Sonal, tell us more.
Oh, well, yes, I'm talking about Hikal. Reported really weak set of earnings in Q1. In fact, it was a washout. Look at the numbers. But despite that, we are seeing a big surge in the stock. It is up 7% today. It's up 35% this month as well. And since its Q1 results that it reported on 11th of August, the stock is up 27%. If we take a look at the numbers, nothing makes us understand why the stock has seen such a big surge. Revenues were down for the company. We saw a sharp decline in their EBITDA also by around 76%, operating profit margins down 1,500 basis points, and the company reported a loss versus a profit in this quarter itself. However, the view is that it was a one-off quarter. Going forward, there is an expectation that the fundamentals of the business will improve. In their conference call, they spoke about their Taloja unit, which is around 15% of their crop sciences revenue, that saw a shutdown because of a pollution board notice. They said the loss from that particular unit was 50 crore rupees, 20 crore rupees. However, the Pollution Control Board issue is still sub judice, and company has a better legal position and a stronger position here to win that case. Raw material prices going forward is now under control. They are falling, and they expect major benefit to come in from Q3 as well. Average revenue run rate of 500 crore is what they expect, and they expect it to actually increase in staggered manner in coming quarters. All the new products that they are talking about or introducing in the market are high margin products, around 20%, with an asset turnover of 1.5 times, so that bodes well for the company. FY23 will be a washout year or a stable year for the company, but FY24 will see growth in mid-teens and margin expansion of 50 to 100 basis points, and a cheaper stock comparatively, so that's the reason why the stock has seen such a sharp move after the conference call and in management commentary.
Okay, all right, Sonal, thanks very much for that. So that's on Hikal, but the other one is Goldman Sachs, which has initiated a buy rating on Affle India. Sonia standing by to tell us why the brokerage is bullish on this mid-cap.
Thanks a lot for that. So Affle India, as we know, is a mobile advertising company, and it benefits in a big way from the increasing penetration on the internet, rising e-commerce, etc. And that is the basis on which Goldman Sachs has initiated a coverage on the stock. They have a buy rating with a target price of $14.95. They say that rising internet, smartphone and e-commerce penetration will benefit Affle. In fact, they're expecting Affle's revenues to grow 32% compounded over FY22 to FY25. Now, they also say that Affle has currently multiple moats, whether it's patents, platforms, a first mover advantage in India, and all of this will help them gain ground as far as revenues are concerned. They are also focusing on a lot of high growth categories, whether it's education technology, food technology, e-commerce, and this will help them in taking the growth forward. So 32% revenue compounded growth, 40% EBITDA compounded growth is what Goldman Sachs is looking at, and they have initiated a coverage on the stock. Back to you.
Okay, all right, Sonia. So that is about Affle, but there are certain updates on the pharma MNC space as well. Abbott and GSK on your radar, Ekta?
Well, yes, CLSA has written on Abbott. They have a buy rating. They've raised the target price. They expect this. They've said that the company has delivered double-digit growth in FY22. Despite no COVID-19 product in the portfolio, the company is seeing incremental competition from key brands such as Dufiston in their key brand, which is Dufiston. And the focus is on introducing new key therapies, which should support medium-term earning outlook. They've tweaked their EPS by around 1 to 3%. GSK had a management meet, so they've indicated to analysts that basically 78% of their business is from prescriptions, 22% business from vaccines. Prescription business is skewed towards the acute segment, which is basically cough, cold, drugs which are not needed all the time, but only for certain conditions. That's 95% of their portfolio. The prescription business is expected to deliver strong growth in Q2. The company is also guided towards an 8 to 9% price hike in FY23. Future levers of EBITDA margin expansion are around, for example, led by growth in promoted brands, new launches, cost-saving initiatives. The main pain point is vaccines business, which is sluggish due to industry growth, hesitancy, delay by patients, which was caused due to COVID-19, but they expect the demand to revive in FY23. The company is also going to launch its first ever shingles vaccine in first half of FY23 for those above 50 years of age. Morgan Stanley has written on GSK. They have an underweight call target of 1416. Rich valuations and relatively lower growth profile keeps them underweight.
Okay, those are the updates on some of these bigger MNC pharma names. But let's move on and get you some important corporate commentary which is coming in from the oil and gas space. Earlier today, we spoke with Mr. Pawan Kumar, who's the Director Commercial at IGL, who spoke about the recent increase in domestic gas allocation and what happens to the pricing after this. Listen in.
Allocation has in fact decreased for IGL. Earlier we were getting around 6.5 million per day, but now it is around 6.06. So allocation has almost come down, but it has benefited IGL because earlier we were getting pooled gas at a higher cost, which was around 10.5 to dollar per MMBTU, but now the weighted average cost is around $7.50. So it has significantly helped IGL to bring down the input cost. We should encourage the customers and the general public at large for buying CNG vehicles, and we encourage them for conversions so that we have a bigger market. So we have a long-term view so that we don't lose the customers. So since we didn't increase the prices, so we are not going to reduce. As of now, we don't have any room for price cuts because we are absorbing whatever hike we absorbed, we are compensating that now.
Okay, so that's the word coming in. We need to just shift focus towards the markets because it seems to be quiet, but there are divergent trends playing out. The market really can't decide what to do with the financials today. They don't know whether they want to buy the stocks or sell the stocks. Currently, the Bank Nifty is up around 0.3% at this point in time. At one point in time, it had completely flattened out, and you can see it on an intraday basis, the jagged edges in terms of the intraday chart for the Nifty Bank. For the Nifty, just about lower by around 16 odd points. The Sensex also lower by around 57 odd points. The street is probably looking at what the Fed chair is going to say in his speech on Friday, and that's going to be indicative of whether or not the Fed is going to be as aggressive in terms of rate hikes going forward or not. On that note, it's also a wrap on Midcap Radar. Stay tuned, more shows and more perspective coming up.